What's going on, guys? It's GBP baby. Welcome to another video. It's currently 1:25 a.m. on Thursday the 2nd of November, and yeah, we've started a new month. I didn't really speak properly about the fact that we've started a new month in yesterday's video, so we're going to be looking into the monthly in this video. And very recently we've actually already gapped down. So if you look on the hourly, we're at 9 p.m. New York time, you'll see we gapped down quite aggressively. But yeah, if we look at the monthly, obviously this is the month of October, we're in November now, and we're slowly coming to that Christmas period. And yeah, you see, I'm still bullish on dollar in general, because I want to see if we can go deeper into the fair value gap, which is between here and here. But if I'm bullish, that means I want to see the low of the month get made in the first 2 weeks. So that would either be this week and next week. So seeing this kind of bearish price action isn't surprising, although I did not anticipate it in my weekly analysis on Sunday. So that's something to consider. So what am I looking at? Well, we have this fair value gap here, but as far as I'm concerned, I would like to see that get left open if we are to remain bullish. I don't really want to see us trade down into that, purely because I'd like to see that act as a breakaway gap for us then to push higher. So because of that, my eyes are now set on this wick here. So this wick here, I'm expecting us to trade into this range, but I think I'd like to find support within this range, turn around, and then launch higher and take out this swing high and dig deeper into that monthly fair value gap we have, reaching for that 50% level, potentially into this range here. So let's go to the weekly. You'll see we've been quite consolidated in general, and you know that I am bullish in general as well, so that's one thing to consider. So what I'm going to do is I'm going to mark out the midpoint of this wick, this last week's wick. I'm going to mark out the midpoint because I will allow price to come down to that and remain bullish. So I'm okay with price coming down to this 50% level, and then for me to still stick with my bias and expectations. But one thing to consider is that, let's say we do trade lower and we take out this swing low. If we take out this swing low and we close below this low, I'd then be bearish on dollar, and I'd be looking for lower prices in general and a run down into more sell side liquidity. So what I'm looking for is for this wick now to give us support really, and then obviously that monthly wick, which is the blue box, and I can mark out the midpoint of that, which levels with that perfectly. I want to see that act as support as well. So there's two different PD arrays layering each other on two different time frames, which suggests that this level down here should provide support. So let's drop down to the daily. You can see we gap down, which is quite interesting. We did have FOMC today, and tomorrow we do have non-farm payroll. Let me see what we have today. I'm pretty sure there's one more event today. Today we got jobless claims, which is high impact news. So we do have a lot of new drivers this week in general. So price is pretty volatile, so I don't really want to be I'd be more cautious than anything. But I wouldn't be surprised if price came down, took out this low, and then wanted to reverse. But again, this level is what I have my eyes set on, this midpoint. Let's go down to the 4 hour. This gap here, again, seeing price gap this much as well, it shows significant bearishness, which is why I'm thinking now, okay, is there a likelihood of us trading into this low? And there might very well be. Another thing to consider is there is actually a breaker here. If we go to the 1 hour, we'll be able to see that. So we have this swing low, and we have this high here, low, high, low, low, and then we break higher. So this candle here, this green candle, is a breaker, which is resting just below, remember, just below that 50% level. So price may want to draw down and tap into that. I did mention this before. There is a possibility that price may want to use that to reverse. So let's just make this box orange. Let's type in breaker. And let's see if price can draw down into that. The reasons I think this may happen is because, one, we've taken out buy side liquidity. Like we took out these relative equal highs. You can see we broke down quite aggressively, and now we've even gapped down, closing lower. So I can imagine that price is going to want to draw lower now, take out these sell stops, and again maybe trade into this breaker. If we take out this low, it will be a whole nother story, and I'll probably have to reanalyze everything in general. But because we're in a pretty heavy consolidation for the past month in general, look at this. You can see we're constantly consolidating, so we're still pretty range bound is what I'm saying. But yeah, we'll see what happens. But overall, Thursday I want to see lower dollar now, purely because of this gap which happened during the Asian session, and then I want to see if we can push down into that breaker. We'll go to the 15-minute real quick. You can see not the best price action, but you can see we're coming down. And yeah, let me just mark out this as south side, see if we can tag that. So now with that in mind, we should go to GBP, and we can go on the monthly on GBP as well. And similar to what I was saying on dollar, there's a fair value gap here on the monthly, right? However, I want to see this get left open if we're to move lower. I don't really want to see price trade back into it, because I'd see this as a breakaway gap for us to then run lower into this swing low and into this imbalance residing below here. So with that in mind, what do I have my eyes on? It will now be this wick here, same as dollar, pretty much. And what I can do is I can mark out the midpoint of that, and I'd like to see the monthly trade up to the midpoint but not close at the midpoint. So that's why I'm saying like this week and next week is fine to see us rally towards that level, with the expectation of lower prices, because we're bearish. And look at how we closed. You can see we closed below this swing low, traded up back into this range here, this wick here, and now I'd want to see a continuation to the downside. But you can see that we're rallying right now, so let's go into the weekly. Again, not the best price action, and I would like to think that the midpoint of this wick would provide resistance, but if we go to the 4 hour, I think that's that may be unlikely. It really depends. I doubt price is going to reach into this swing high, purely because of how we're respecting this wick already. Remember, this is that monthly wick. I'll just show you now. So this monthly wick, that 50% level, if we go to the daily, sorry, not even the daily, but you can see our price has respected that, and turned away at that level. So I wouldn't, if price was to take out this swing high, I'd then probably expect higher prices and run into buy side liquidity here and here. So as long as let me say that again. So long as price stays below this swing high here, then I'm going to continue to be bearish. This high will likely get taken, and we have a beautiful imbalance at the 50% level here that price is likely going to draw into on Thursday and or Friday. But with non-farm payroll, price may want to trade into this on the Thursday, and then we have a crazy reversal on the Friday. Who knows, So these are just things we need to consider and be wary about. But overall, I'm expecting lower dollar, and that means higher on pound. And you can see this from the expansion. You'll also see that pound failed to take out this swing low. So we have a willingness to go higher here, because if you go on euro, you'll see that euro actually took out that low, whereas pounds showed a strength, and then you can see we're pushing quite aggressively higher. So again, the likelihood of us trading back into this fair value gap is quite high right now. So yeah, how could we get in on an entry in this? Well, we do have a mitigation block. Technically, this swing high here, this wick, is a mitigation. We can anticipate price to come lower, and then find support, and then trade higher, taking out this swing high and filling in this imbalance. Let's look on the 4 hour very quickly. Really, we should be looking at this candle here. And I say that because it's the highest up close candle before the move down, before the break higher. So if it was a breaker, it'd be low, high, low, low, and we're anticipating a trade higher, right? So that's the level I have my eyes on. So I'd like to see price trade down into this level, find support, and then run up higher. It doesn't need to trade into this high, but I'm calling this level as a turning point for pound. See if we can reach down into that. and then use that to push higher. But let's go to the 15 minute. You'll see that there's a fair value gap below here as well, and also an inversion fair value gap. So I'll just show you that now. So this is an inversion fair value gap. Why? Traded on the downside, traded on the upside. When price comes back down to this level, we expect it to find support. That would be a buying opportunity for us to then run, take out this swing high, and again we have this beautiful massive imbalance here with a swing high in it as well. So let's go to the 1 hour. Let's see if there's any more specific buy side we can mark out. There's this high here. And also there's a breaker, high, low, higher high, and then we break lower. And price hasn't actually returned back to this candle here. So more specifically, I'd want to see price turn around at this point. So you can see how I'm putting together a expectation for the day tomorrow. Obviously high impact news will help drive this, but overall I'd like to think that we can make the low within this range, this inversion fair value gap, and then find support again and then push higher and run up to this level here. So that's what I'm expecting. Let's say we take out this swing high. If we take out this swing high, whole nother story. We're likely bullish and we can start looking for high prices, and that would mean that dollar's likely taking out significant swing lows as well. But yeah, it's quite interesting really, but I reckon we can get in a nice move up to that tomorrow. So finally, let's go to euro. I've already got marking outs in euro, as you can see, but euro similarly again, fair value gap. I want to see this get left open. Why do I want to see this get left open? I want to see this get left open because I'm expecting a push lower to the downside. So what am I looking at? I'm looking at the 50% level of this wick here. So let's just get that marked out for us. Remember, these are monthly levels as well, so that's another thing to consider. Because they're monthly levels, we can expect strong reactions off them and for them to be significant on lower time frames. We go to the weekly. You can see we've kind of wicked through it, quite consolidated right now, and also this matches up with the 50% of the wick that we've already created this week. So with euro, because euro is showing more weakness than pound, and we know that because of this. You see how euro's taking out a low here, taking out another low here. That means that this wick now, I don't expect this high to get taken. And let me just add GBP real quick just to show you the difference. So this swing high, this same swing high, GBP, I expect it to take out the buy side. Euro, I want to see it fail to take out the buy side and find resistance at the 50% level of it. And we can do that. And we can do that by marking out the midpoint here. Like so. Right, so if we drop down to the lower time frame and then go back onto the euro, you can see how euro did create a breaker as well, low, high, lower, low, broke higher. I'm looking at this range here for a means of support, and then again I want to see us push into this fair value gap up here where there's likely going to be a breaker residing as well. So we do actually have an inversion fair value gap on the hourly, which would provide a support and offer us an entry right here. So as price retraces back into this range here and comes into this swing high, I'd want to be looking for buys on euro to push into this. However, like I said, because pound is the stronger currency right now, it'd be better off trading GBP in order to get that, in order for us to reach up into the next PDA rate, which would be this fair value gap in this case. If we drop down to the 15 minute, we also have a breaker on euro side to complement that. Got a high, low, high, low, higher high, breakdown with a fair value gap as well, which is a perfect place for price to want to come and fill. So yeah, that's going to be everything, guys. Overall, I want to see us retrace down, offer us a nice entry in London, and then I'd expect bullishness for the rest of the pretty much for New York session, so we can buy into the buy side, and then I'd want to see another reversal happen up here. It would be very consolidating for the whole week, but that would then offer a large expansion on Friday for non-farm payroll, which is likely anticipated right now. So that's going to be everything, guys. Thanks for watching, and I'll catch you in the next one. Peace.